For thousands of years, money was a physical object you could hold. Today, that tangible reality is fading away, replaced by a frictionless digital grid. Most of us welcome the shift. Swiping a screen or tapping a watch eliminates the weight of a wallet and the slow process of counting change. We treat it as a simple, modern upgrade. This transition began decades ago. When early credit cards arrived, they did something paper money never could. They permanently linked your personal identity to every cent you spent. By removing the physical bill from the equation, money undergoes a transformation. It is no longer an independent store of value. It becomes a piece of software. This is the trade-off of the cashless revolution. We are swapping our last untraceable financial freedom for convenience, moving into a system where our ability to spend is defined by a digital gatekeeper. Cash is a bearer instrument. If you hold the bill, you own the value. It changes hands privately, leaving no digital footprint. Digital money works differently. Every transaction acts as a sensor, reporting to a centralized record. The system logs your location, time, and purchase category. These data points are aggregated to build a behavioral profile, a digital map of your habits. The banking industry spent decades marketing this level of tracking as a benefit, using the promise of 24/7 automated access to make centralized surveillance feel like a luxury. This infrastructure exists to replace the anonymity of cash with total visibility. It ensures no transaction, no matter how small, happens outside the ledger's view. This brings us to the core of the digital shift: programmable money. In this environment, currency is no longer static. It carries specific conditions dictated by the institutions that control the network. If a bank or government decides to restrict certain behaviors, algorithms can instantly freeze your ability to pay. Your purchasing power becomes a toggle switch that can be flipped based on your travel habits, your speech, or your political associations. We are seeing the early frameworks of this today. A transaction denied message wouldn't be due to a lack of funds, but because an automated script determined you reached a mandated carbon limit. In a society without physical currency, your survival depends on a corporate-approved digital token. If you cannot buy food, if you cannot buy fuel or shelter without permission, the cost of dissent becomes everything. Historically, the ultimate defense against a bank was the exit. If a financial institution implemented predatory policies, you could withdraw your savings in cash and keep your wealth safely in your own hands. Without that exit, you are vulnerable to negative interest rates. Central banks deliberately shrink your balance every month to force you to spend. When cash is gone, your savings are locked inside the system, forcing you to pay a fee to hold your own money. You lose your leverage. You become a captive in a digital cage, where the terms of your wealth can be changed by a central authority. Resisting this architecture requires a deliberate change in how you manage your wealth. You need a defense strategy that prioritizes independence over convenience. Step 1 is maintaining a physical cash buffer at home. This serves as your insurance policy. If a bank glitch, power outage, or an algorithmic error locks you out of your account, you still have the means to provide for your family. Step 2 is moving a portion of your savings into tangible assets. Gold, silver, and other hard commodities exist entirely off the digital ledger and cannot be erased by a line of code. This also includes physical property and local investments. By building wealth in things you can touch and see, you keep value within your own community, rather than leaving it in a remote digital cloud. Step 3 is practicing intentional friction. Stop automating every payment. Track your budget manually and use cash whenever possible to keep the habit of financial privacy alive. Speed is the enemy of freedom. Every time you trade privacy for a faster transaction, you give up a piece of your independence. Protect your cash, guard your data, and stay sovereign.